This secret strategy made a day trader $82 million, which he now uses for fast cars, multi-million-dollar yachts, and luxurious mansions. But what does this prestigious day trader look like? This is him. But don't let his looks fool you. This guy's an absolute genius when it comes to trading. His name is Christian Kalimagi, and he made a 5-step trading strategy that let him trade from just $9,100 to $82 million in just 8 years. But how did a guy like this grow his account size to 82 million? Did he use specific indicators? Was there a specific strategy he followed? Yes, there was. And luckily for you, I scavenged the internet for weeks trying to find this exact information, and I found exactly how he finds his stocks, what he looks for, and his exact 5-step strategy that he follows to make sure he's entering into profitable trades. In order to follow this strategy, we have to start from the very beginning. Step 1. Christian had very specific conditions he looked for when trying to find the right stock. His first condition was he wanted to find a stock with a very strong move to the upside, specifically a move that was between 30% and 100%. That specifically happened within the last 3 months. An easy way you can do that is by going to the TradingView screener. I'll leave a link in the description if you don't yet have it. Go to the screener, click the filters tab. Make sure we're only looking at common stock, and make sure the change of the last month is above 30%. This will give you a list of stocks to choose from that have gone up 30% or more recently. That is step 1 complete. Step 2 is the fun part, adding the indicator. Go to the indicators tab and type in moving average. We're gonna need 2 of them, so click it twice. Go to the settings of the moving average and change the length to 10, and also make sure you're using a simple moving average. Then go to the other moving average and change the length to 20, and also make sure you're using a simple moving average again. I'm also going to change the colors of the moving averages so we can see them a lot better. Now, Christian added these moving averages for a couple of reasons. The first reason is to make sure the stock was currently consolidating, or as he called it, surfing the moving average.
Just like you pull in and you just get spit right out of them, and you just drop in and just smack the lip.
When looking at these big moves, Christian was looking for some consolidation right after, meaning he wanted this big move and then a pullback where price started to move sideways. He said that he specifically wanted this consolidation to last between 2 weeks and 2 months. So when looking for this consolidation, make sure it fits that time frame. Now, when Christian mentioned surfing the moving average, he meant that he wanted to see the price holding around the moving averages, not going too much higher or lower than where the moving averages were. It's even better if, say, the S&P 500, which is an indication of the general market, is falling a lot, and the stock you're looking at is still holding the moving average, as that's showing immense signs of strength as it's still holding even though the market is falling. Just a little tip. So what you want to do is mark the consolidation period. Again, make sure this move lasts between 2 weeks and 2 months. That is step 2 complete. Step 3 is when we start getting into the real interesting stuff, where the strategy starts to take place. But first, let me show you a site called HankerTrade. Ever heard of it? They're a forex and crypto broker that have extremely low spreads and low commissions, some of the best on the market, which who doesn't like saving money on commissions? They also have an extremely friendly support team who will answer any type of question you have. And the best part, they are running a special promo where if you sign up with the link in my description, they will match whatever you first deposit. So if you put in $100, they will match that and give you $100.
That sounds like a deal.
Sign up with my link and make sure you use that special promo. It's free money. Okay, back to step 3. Now, what Christian was looking for was a breakout of this consolidation period. He wanted to see a candle break the resistance of this zone. Now, a lot of traders would say, wait for a break, then a retest, then enter as soon as price comes back down to the resistance. But Christian said he liked taking a different approach, which brings me to step 4. Christian would go to a higher time frame like the daily. He would then enter as soon as the candle broke the resistance. Once that happened, he would now be entered into the trade. He would then proceed to set his stop loss right below the low of the daily candle that broke the resistance. But for his take profit, he did something that I've never seen before. Unlike the usual route of setting your take profit at a 2-to-1 risk to reward ratio or setting your take profit at a certain percentage, Christian set his take profit based off the amount of time that has passed. He said specifically he would sell a third of his position after 3 to 5 days. So since we're on the daily time frame, we just wait for 3 to 5 candles to appear. Once they do, we can now sell a third of our position for guaranteed profit. But what happens next is where the real profits start coming into play. Which brings me to step 5, the trailing stop loss. Now, remember when I said this earlier? Now, Christian added these moving averages for a couple of reasons. Well, the second reason why Christian uses moving averages was for a trailing stop loss. Let me explain. So in this current trade, we sold a third of our position after the close of this 5th candle. What he would do next is raise his stop loss to the entry. This way, if the trade ends up going down, we still made our money on the trade and we can move on to the next one. But then he would also allow the moving average to act as a trailing stop loss, so he would still get the benefit if there was a humongous move. You see, one of the main reasons why this strategy works so good is because it's very good at catching monster moves. When doing my testing with this strategy, I saw that it wasn't odd to see this specific strategy catch 100, 200, 300% moves, which catching these moves is where the strategy really shines. So he would move his stop loss to break even, then he would only sell the rest of his position once price broke the 20-day moving average. It's also very important to note the body of the candle must break the moving average. If a wick like this breaks the moving average, we do not sell the position. We only sell once the body of the candle like this has broke the moving average. So going back to the trade, we let price ride the huge amounts of momentum and wait for it to break the 20 EMA. After a couple of weeks, it finally breaks the moving average, which we then exit the trade completely, resulting in an astonishing 438% move. Now, I'm gonna be honest, when testing this strategy with hundreds of trades, I found it actually lost more than it won. But since the stop loss is so low and the profits are so ginormous, it actually made way more profit than it lost. For example, if we have 7 losing trades and just 3 winning trades, that's a win rate of 30%. Pretty shitty, right? But if those losing trades are only 1% and the winning trades are around 20% each, that means you're still profiting 53%. So he actually said this himself. His trading journal at times is mostly a sea of red, but then he gets a big winner, saying, yeah, you could be wrong 8 out of 10 times with this strategy, but it still makes huge amounts of money in the end. Next, we'll be looking at Takashi Kodagawa, who made 153 million with his trading strategy. And I gotta say, that strategy is absolutely mind-blowing. Go check that out. Thanks for watching, and I'll see you guys next time.